All right, there we go. The audio is finally working, guys. I apologize. I had some technical trouble, so I switched mics. Anyway, this is going to be quicker than the last one, which was already quick because the time to put the trade on may be coming very quickly, very soon. So I wanted to provide an update. First, I wanted to say that we're in dangerous territory, guys. Don't ever go out there without a stop, and it better be tight. The less likely your count is, the more probable the opposing count is, or if there are no highly probable counts either way, you better be very, very stingy with what you give to the market as far as losses, okay? It's better to get stopped out 10 times in a row and take a bunch of paper cuts and finally get it on the 11th than it is to just be overly aggressive and trade without a stop loss, or your stop loss too loose and you get your face handed to you just once, okay? It is okay to lose a lot. This is one of the points I was making in my first video, members only, where I was telling you about the idealized P&L, where you've got a lot of little paper cuts and then occasional big wins. But the big wins is what the name of the game is in trading. We're looking to play probabilities, and the market doesn't play fair or right necessarily. It'll do whatever the hell it wants. So you've got to be aggressive with your stop losses unless you count as just a badass count with a very, very, very high likelihood of working. Okay? So all right, let's flip it to the screen. Right when my mic crapped out, I had this up there, so I'm not going to redo it. But basically, my point is, look at the risk reward of this golden corner pocket, 618 to 65% being played correctly. Now we're past the 618, so really, all I'm saying is buy, from the low, ladder up to the 65 and take a little stop loss right below it, and you've got the makings of a 40x trade, right? If it hits the algo target on the upside. Now, you can even tighten it up even more than where you see this red here. You can tighten it up even more for a better risk reward. My point is these kinds of trades where there's technical validation for a count and it's not like a 1% probability count, in my opinion, are must takes. If I get stopped out of here, I won't really care because it's such a tight stop loss, and I'll probably reload. Look to reload at the golden corner pocket of this lower fib pulled from here, from the bottom of the move as opposed to here. Now, providing some support as well as some discomfort is this 200% pitchfork, like the last standing boundary, is providing support. Just like this boundary, one below the 100% provided support, this pitchfork has been a pretty good read. There's been support at every major level here. Resistance here, the median line, this is where the Vegas waves crossed. Some support at this level, some support at this 100% lower boundary, which is where I think a triangle got put in. And then, this is where we were before when I did my last videos. This level here provided a bunch of support. Now we're getting supported by this final boundary, lower boundary. Okay, so we could break below it, which is scary. We're also getting support from this channel, 1 to 2. This is almost a lesson in advanced channeling, is when you're looking at channel and motive sequence, pay a lot of attention to the 1, 2. Origin of the 1, end of the 1, bottom of the 2. That channel, the upper boundary, should provide support, and it does. It does provide support here, which is where the triangle got put in. We'll count the triangle in a second. And then this median line is where we're stopped at right now. So I've got this advanced channeling tutorial coming up in a moment here, but this is a case study of how important this channel is as far as providing structural support levels, right? And I want to say that it provided structural support in spite of being in no man's land on the VPVR, on the volume profile, right? So that's how significant this channel is from a geometry standpoint. Now, aside from the Vegas waves being so separated, I don't like that we're in this no man's land. But I'll note that volume starts to kick in right around the bottom of this golden corner pocket of the higher degree, 1 degree up, right? So pulled from the bottom here. So again, I normally wouldn't take this trade, but the reason why I am is because of this triangle, which I'll measure in a second. The punchline is this orange measurement, 100%, is the projection for the thrust. Okay. Anything else I want to say before I flip to the lower time frame? Yeah, just Sam drew this, but I'll just redraw it real quick. The pitchfork from here to the high here. You know, median line analysis says that we cross the median line. So if the bull case is in play, we should revert back because one of the principles is that you go back and forth once you hit the median line, but then you explode upwards or downwards depending on which direction you're playing with a pitchfork. So there's that little technical detail. Oh, also the oscillators. They weren't as bullishly diverging as before, but you still got some divergence on the Elliott wave oscillators for sure, right? No longer in the RSI though. That's notable. But in the well, looks like we just still flattish on the MACD, so that counts as divergence. And then on the stochastic, we're still divergent. And in this ADX indicator, the momentum seems to be being shaved off here by time. So this is the high. This is almost a double top, but a little lower, and this is substantially lower. So the momentum is definitely coming off this move from the top. Okay. Now let's dig into the 5-minute. So I had this counted as a double zigzag with an X that was also a double zigzag, if you guys recall. Okay, which is allowed. Let me take the VPVR off. The W and the Y can't be anything but simple patterns, but the X can be all types of crazy. So I'm going to just remake this point that if this is a motive sequence down, I don't see how it's anything but a diag because this is so clearly three-wave. Whether you agree this is a triangle or not, it doesn't matter. The overlap here, the overlap here, the overlap here to this makes it such that you have to have the move commencing in some kind of diagonal structure, right? And if that's the case, and if this is the 1 and this is the 2, then there's all this type of overlap here to start the 3. So either the 3 starts with a diagonal structure or the 3 is itself a diagonal structure. Anyway, it's hard for me to count this as a regular impulse, in other words. But even if you had this as a 1, as a leading diag 1, which I can't, I don't, it's hard for me to imagine that. But, let's say this is a leading diag 1 and this is a 2. Well, the 3 is already well past the 1618. Okay, so this downward move combined with the oscillators indicating potentially at least a retracement, if not a reversal, that's another reason why this is a trade that I'll be taking, perhaps a little bit prematurely. But more importantly, from a geometry standpoint and an Elliott standpoint, this to me is a pretty clear sign, followed by this big volume pump coming off of it. I mean, this is textbook triangle, guys, textbook. You got declining volume as it gets put in. You got this big pump off the thrust, right? So the question for me is less, is this 1, 2, 3, 4, 5 down or A, B, C? The way I've got it labeled from a trading standpoint doesn't really matter because the point is this triangle suggests to you that from the thrust measurement of 100% here, the move is going to end very soon. And that's what we care about when taking this trade. I'm not saying take every triangle thrust bottom catching trade. Obviously, in combination, all the other analysis we've been doing, that's what makes this interesting, and especially this risk reward. But this is, to me, the reason why I'm taking the trade a little long. Also, if I were looking to short, I wouldn't certainly do it here. I would look to initiate my short after the retracement that ensues this thrust ending. And we don't know where it's going to end, but we have some clues. Okay, so whether you have this as a leading diag A of the Y, and then a running triangle A, B, C, D, E to put the B in, and then a final impulse down to put the C in, or whether you have this as a, you would move the X either to this pivot or even this pivot, which I think is just not credible given how, anyway. But this is by far the most probable count because it actually has a high at the end of this X wave. But whether it's here or here, and you count this as a leading diagonal diagonal or not, and you have this maybe as a 1, 2, 3, this 4, and then a 5. It doesn't matter. The point is, downward momentum, whether bull or bear case, must end soon if this triangle thrust is to be right. And there is another little triangle here, A, B, C, D, E, that can be considered, but the thrust measurement on that little guy would be, if this is the A off the E, it would be 100% here. And look, we cross that, right? Now, just because we crossed it doesn't invalidate it. But I want to say one thing. Two outcomes out of a triangle for a thrust. They're about equal in probability, 50-50 or so. Outcome number one is that the thrust is sharp and short-lived, and it reaches the height, the same length as the A. From the endpoint of the A down to the BD trend line, vertical line, okay, that's the measurement for a triangle thrust. So it ends there, or it meanders sideways more and is a much longer one. Both roughly equally probable, but given the sharpness of this move, I think it's of the former, not latter variety. And so my target for this thrust ending would be somewhere between 100 and 127% of the height of this A. We're already pretty much there at the 100%. And if you zoom down to like the 1 minute or something, you can see the clear wave count that this is impulsive. 1, 2, we're putting in the 3 here. 1, 2, 3, 4, 3 of the 3. And now we're putting in the 4, and there's a final push down, which the guideline of equality would equate in size to this one. So somewhere around here, somewhere right around the 100%, depending on where the 4 ends upwards. And at worst case, somewhere around here. All right, so zooming back out to the 1 hour. So where does that leave us? Well, key takeaways. I don't think this is 1, 2, 3, 4 anymore. I just, given the sharpness and the depth of this 4, I mean, technically valid up until the 1 gets crossed at around 67.86 or so in Bitfinex, but nah, not buying it. I think it's either 1, 2, 3, 4, 5, which is a count I hate because the geometry is so bad for 3, 4, 5. I mean, this is all clearly one move to me, especially when considered in the context of this being a 1, 2. Or 1, 2, 1, 2. Now, I know that sounds very aggressive and crazy and bullish, but if you zoom out to the 4 hour, in the context of a count that has the X wave, this wave, A, B, C, of the entire structure, the entire corrective structure for what might be a cyclical correction, is that so crazy? Not at all. 1, 2, 1, 2, 3, 4, 5, 3, 4, and then up for the 5 right around here where we projected it, right? So it's if this count where this X wave is a flat pattern is in play, this is very credibly a 1, 2, 1, 2. I'm not saying it has to be, but of the possibilities to be considered, that's one that we must. So we have a completed 5 wave here, and then a 2 down, a 1, 2, 1, 2, and the possibility this is a 1, 2, 3, and a deep ass 4, which is my least favorite of those 3 on the bull side. And on the bear side, we've got potentially a triangle coming in, A, B, C, D, E, a triangle X, which would be brutal, because if this is the C and how short it is, and the D coming down, well, the E's got to be below this height, which means that the Y is going to take us to a territory of a lot of pain. So, but one move at a time, one wave at a time. We're going to be trading all of it, and I'll be doing a lot of these live, so you'll get my real-time thoughts on it. But I think the trade of the day now is to catch this thing, whether it's a corrective structure related to an impulse up, or whether it's a motive sequence down, and this ends, this is, the triangle I just mentioned coming down, and this is kind of the A or part of the A, and then B, or, retracement, the 4 of the A before a 5 down. Who cares, right? Point is, around this level, I see a lot of indications that there's a reversal, and if not, then I'll probably take this golden corner pocket trade here. which I'll be uploading videos on that. But right now, the risk reward on this is so juicy relative to the thrust measurement that I got to take this. I got to take this. I'll probably put a stop right around here, 68.60 or so, and I'll be buying in a short little ladder, or maybe just a market order below the low that just got put in. So maybe right around the 65%, which coincides very neatly with the 100% thrust projection. Alternatively, if I don't want to use as much leverage, I might ladder from 100% down to 1272% and put a stop below this higher degree, 65%, higher degree golden pocket, and I'll just buy this corner pocket here. Or maybe what I'll do is I'll take this super tight trade, take a paper cut, and then ladder in for this golden corner pocket and put a stop here. A lot of ways to play this, guys, but my point is I'm seeing momentum stopping around here for at least a retracement, if not the beginning of a move up. Now, given where the Vegas waves are and these oscillators not being so bullish, I would say that if we're going to start a move upwards with a bottom around here, well, it's not going to be of the super sharp variety that looks like this. It'll be much more like, something that looks like this for further basing and consolidation before you start to move up. So if you want to be more conservative, that will be the trade, is to, since we're not expecting a moonshot upwards after this momentum stops, wait for the 5-wave move up and then buy the 3-wave retracement down, or at least wait until the bottom is established and the move up begins. But just given how much I love triangles, and I believe this is one, and just this being 40x, I got to take this trade. Up to you how you want to do it, but manage your risk appropriately. This is not a high probability count. There is no high probability count that exists in any of this move, bull, bear, or otherwise.